the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the major developments in the banking sector. In today's show, we will talk about the rising home loan rates and what the borrowers can do about it. In our Banker's View this week, we have with us Ramesh Iyer, Vice Chairman and Managing Director, Mahindra & Mahindra Financial Services. For our Banking for You segment, we will tell you all about micro-ATMs. Tamal Bandhopadhyay, our consulting editor, will also join us to talk about the struggles of public sector bankers. At the end of the show, we will tell you the results of last week's poll and the question for this week. Home loan rates that had stayed around 6.5% in 2022 have now crossed the 9% mark, hitting borrowers badly. What can they do now? Manujit Saha's report answers this next.
After staying benign for a few years, interest rates have started to inch up due to rising inflation. During the COVID-19 period, the policy repo rate was reduced to 4% by the Reserve Bank of India. Now it stands at 6.5%. As expected, higher repo rates have led to higher interest rates for home loans. Home loan rates that hovered around the 6.5% mark in 2022 have now crossed the 9% mark. Borrowers who took home loans in 2019-20 are the worst hit. They borrowed when the interest rates were the lowest.
So very clearly, there has been a very significant impact on borrowers who borrowed in 2020-21 because interest rates had gone off to historic lows during that period of time on the back of the very sharp interest rate cuts that had happened post-COVID. And post the normalization process in the last 1 year or so, EMIs have gone up very significantly. So I think a lot of how borrowers need to deal with it is that, first of all, when they are taking floating rate loans itself, this is the nature of how floating rate loans actually work. That there will be periods where when interest rates are low, where things will actually be very, very attractive. There'll be periods where interest rates will be high, like we are seeing right now, which is actually not good for borrowers. And then there will be periods of relative stability along the way. And historically, these cycles last for about 2.5 years very often.
Many borrowers whose EMIs consisted of 20 to 30% payment towards the principal now see that their entire amount goes only towards interest payment. When interest rates go up, lenders either increase the EMI or the loan tenure. What should a borrower do in such cases?
I think there are quite a few ways to deal with it for borrowers. I think the default option is actually for loan tenures to get extended, which is what happens a lot of times, though that is not financially a very good option for borrowers because it increases your overall interest cost over the tenure of your loan. So ideally, if the cash flows allow it, the best thing that can be done is for the EMI to be increased with keeping the tenure constant. The second option is that we are also at the time where a lot of typically annual bonuses, incentives, variable pays get paid out, and therefore there is a very human behavioral tendency to sort of splurge with that money, saying that this is extra money that has come in. In reality, this money can actually go in and you can partly prepay your loan, and by prepaying the loan, the amount of loan outstanding will come down, and therefore you might be able to deal with your interest cost increase much better.
Borrowers have other options too. They can liquidate other assets to prepay a part of the loan, or they can refinance the loans with the same or another lender, experts say. This is because of spreads on home loans. That is, the difference between the benchmark rate and the actual lending rate. This spread has fallen to around 2% now, down by 60 to 70 BPS in the last year, according to a study by Bank Bazaar. Most lenders have reduced their spread in the last year. According to a Bank Bazaar report, the State Bank of India's spread, which was 275 basis points when the repo rate was 5.15% in March 2020 has fallen to 200 basis points in March this year. However, there could be a cost associated with balance transfer. 1. Some lenders charge processing fee, which could be a percentage of the outstanding loan amount or a flat rate. Often, lenders waive the processing fee as a special offer. In case the borrower is switching from one lender to another, they have to pay stamp duty to the state government, the rate of which varies from one state to another.
So many options laid out for the borrowers there, ranging from liquidating other assets to prepay a part of the loan to refinancing the loans with the same or another lender. Ramesh Iyer, Vice Chairman and Managing Director of Mahindra & Mahindra Financial Services, speaks to Manojit Saha for our Banker's View segment this week. Here's the chat.
Hello and welcome to the Business Standard Banking Show. Mahindra & Mahindra Financial Services reported 14% increase in its net profit to 684 crore for the January-March quarter. The loan book grew by 27% to close to 83,000 crore. The NBFC is a leading player in the vehicle and tractor financing. Ramesh Iyer, Vice Chairman and Managing Director of Mahindra Finance, is with us today to share his thoughts about the Q4 numbers. Mr. Iyer, welcome to the show.
Thank you so much. Thank you for having me.
Q4 disbursement grew by 50% year on year. What was the reason for the strong growth?
So I think, I've been saying this for quite some time, and we have seen it for now more than 7 or 8 quarters, that the rural sentiments are holding up. The demand for vehicle tractors is pretty high. Pre-owned vehicle demand is very high, and it has been across the geography, not limited to any particular state or location. And as a national player present all across the country, I think we seem to have been definitely benefited by this buoyancy and the positive sentiments of rural.
Now, Mahindra Finance has adopted a twin strategy. One is to grow the mass affluent category to improve the asset quality. The other is to scaling up the pre-owned asset book, which will be for the improvement of the margins. How is the strategy playing out?
So clearly, we have been a very strong player in the semi-urban rural market for now more than 3 decades. And that geography we understand well. We understand the challenges of the geography. We understand the needs of the consumer. And therefore, all our branches are located in a manner which can service the customers extremely well. Our products are designed to serve their requirement. And our people capabilities and system capabilities are also developed to be able to handle that need. And we understand that little volatility that rural brings in. What we're trying to do there clearly is to cut out certain tail of such customers who've been actually creating the pressure for us in the system through a better underwriting engine, through using various data analytics, by using various reach out to these consumer forums and understand as to, who is suffering due to what reasons, etc., etc. And that in a way is helping us to stabilize our asset quality. And you can see it from our numbers. Maybe we'll speak about it as we move along. As far as the pre-owned vehicles are concerned, I think that's been one segment which, if you recall our past discussions, have always been very, very buoyant about. And the reason is that as the asset cost keeps going up, right, there will be one set of customers who will want to use similar vehicle, but may not be wanting to afford or invest on a new vehicle. And they will always look for a pre-owned vehicle because they would think, I have a 2-year use or a 3-year use. Why do I invest in a new vehicle, which will be maybe 5-year possibility? So therefore, you will find this entry-level customers, people with limited use requirements, people who do not have to really travel a very long distance on a daily basis. They will all kind of look at a pre-owned vehicle, and that is doing very, very well for us. So both strategies are chugging along very, very well. And that's the outcome in the numbers you see.
What is the bifurcation between Mahindra vehicles and non-Mahindra vehicles that you finance?
So today, I think our book is about 45-47% Mahindra, about 52-53 is non-Mahindra.
So it seems the rising interest rates are yet to dent the demand so far. But going ahead, do you expect some slowdown to happen, or you think the momentum will go on at least in the current financial year?
So what I have seen is interest cost definitely does affect asset acquisition if the market conditions are weak. If there is a need and use for the vehicle is high, look at, let's say, even if you look at a 200 basis point increase, on an asset loan of, let's say, 7 lakhs, right? We are talking of 14,000 rupees on a loan period of 3 to 5 years. Is that really a decision point? Because if somebody is putting in 2.5 lakh margin money, he does not really look at 14,000 or 20,000 to be an impacting figure.
Right.
But when the demand by itself is weak because of the economic condition, then all this matters. But today there is so much buoyancy there. Every vehicle that's being bought is put to use immediately. I think it gets absorbed in the total use of the vehicle.
And finally, you were appointed as a chief executive officer in May 1999, and then elevated as a managing director from April 2001. In 2016, you were redesignated as vice chairman and MD. A very long journey at the top position of Mahindra Finance will come to an end in 1 year, next year, when you superannuate. The company has already named a new CEO. What is your two advices to the new CEO?
I think it's fundamentally a very, very strong balance sheet. It's a well-capitalized balance sheet with Mahindra name and support. And it's working in an area where you have a niche and you have a strategic differentiation that you make, and it's a purpose-based business that you serve the population at large there. I'm sure the new CEO will take forward this legacy extremely well in the same direction. At the same time, I think there are many, many emerging opportunities in that same space. We were a very strong vehicle tractor finance company. I think going forward, we are going to be a solution provider where we would look at that population asking for more than just vehicle and tractor loan. They would ask for an investment product, maybe. They may ask for a small ticket loan, maybe. They will ask for an SME loan. They may even ask for an insurance advice or an housing loan. So I think we will actually grow into become a solution provider for that segment of the customer and use digital data technology, which is now very robust, and work with partners who can provide you the desired service is going to be the mandate the new CEO will put together and drive for its next phase of growth.
So basically, all the subsidiaries that you have, that will play a much more vital role going forward.
Absolutely. Absolutely. If you look at our housing subsidiary, we experimented that model when no one else was going into deeper pocket and trying to do 1 lakh, 1.5 lakh loan for upgradation. We were doing pretty well. The disruption of COVID, etc., put the customers into huge difficulty. And we realized that that segment of customer, we need to be choosy about who should be provided that kind of a loan. I think that experimentation has been done well. And you will see in the next 3 years, that business taking a phenomenal shape, both in terms of growth and quality. Growth will come from rural plus affordable housing. So that will be the new approach. And the quality correction of the past and the future quality retain its new avatar together will drive the profitability. I think the dream is to take the company IPO in 3 years.
Thank you, Mr. Iyer. It was a pleasure talking to you as always. And again, thank you for speaking to Business Standard.
Thank you so much. Thank you for having me.
Ramesh Iyer says that rural sentiment is holding up despite the interest rate rise. Demand for vehicles, tractors, and pre-owned vehicles is strong across geography. This has translated into robust loan disbursement for the non-banking finance company during the January-March quarter. Moving on, while digital transactions may have risen over the past few years, micro-ATMs are also on the rise. In our Banking for You segment today, Raghu Mohan explains what micro-ATMs are and how they work.
Did you know that despite the exponential growth in digital payments, the micro-ATM business is booming? But first things first, what exactly is a micro-ATM? A micro-ATM is a device similar to a point-of-sale terminal and is used by business correspondents or BCs to connect with the banks they represent. BCs use these devices to authenticate customers and perform transactions. Although it is called micro-ATM, it does not have cash storage or dispensation facilities. Think of it as a miniaturization of the legacy ATM, or in effect, a portable ATM. To illustrate, assume you need Rs 2,000 in cash from a BC. A Kirana store or any merchant outlet can also be a BC. You swipe your debit card to authorize a transaction, and the amount is handed to you from the store's cash till. Simultaneously, while the cash at the store is now with you, an equal amount would also be credited to its bank account. And if this happens to be a savings account, it starts to earn interest rather than being idle at the store. It's a win-win for you and the dispensing agent. This is how the process works. The customer undergoes a verification process. The micro-ATM displays transaction options. On successful transaction, a message will be displayed on the screen and a printed receipt will be generated. The customer gets an alert from the bank on the mobile on successful completion. But how do micro-ATMs authenticate a user? Micro-ATMs support various means of authentication. These are Aadhaar plus biometric, Aadhaar plus OTP, card plus biometric, card plus OTP, or card plus PIN. An account holder can access the bank account through a micro-ATM using any of these methods and perform supported transactions. According to the RBI data, India had 1.56 million micro-ATMs at the end of February 2023, and there were 91.8 million cash withdrawal transactions at these micro-ATMs in the same month. The total value of these transactions was Rs 25,483 crore. For FY22, the total value of micro-ATM transactions was nearly 3 trillion. This was a little less than 10% of the value of transactions at ATMs in the same financial year. Micro-ATMs are based on a bank-led model for financial inclusion, where the Aadhaar infrastructure is an overlay on the existing banking and payments infrastructure. The micro-ATM supports the basic interoperable transaction types like deposit, withdrawal, funds transfer, balance inquiry, and mini statement. It also tells you that cash still remains in vogue. Micro-ATMs' growth must also be compared with what's happening in the ATM market. Currently, there are 257,000 ATMs, and after a lull of many years, requests for proposals floated by banks show an order book for 17,000 ATMs. What is not clear is the impact of micro-ATMs on ATMs. While cash out at micro-ATMs is not a 24/7 offering, it can affect the ATM channel's business.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
In places where banks do not have a reach, such as remote locations, and people need cash, micro-ATMs do serve an important purpose. In our next segment, our consulting editor, Tamal Bandhopadhyay, continues with our discussion from last week on the struggles of public sector bankers. Hi Tamal, welcome again to the Business Standard Banking Show. So this week, again, you have continued with the same theme of the life of a PSU banker. Why have you continued with the same theme, and what more do you have to tell us today?
Yeah, thanks, Ruchika. But yes, it's a very rare thing. I don't do a continuation of the same theme, but here the response was pretty good. I mean, I don't want to use the adjective phenomenal, but bankers from different parts of India, they spoke to me, they sent me text messages, they narrated their stories, some on their parents' stories, some on their children's stories. In fact, for the entire week, I had been through listening to their stories. So I thought, why not culling from their stories and creating, it's not a fictitious diary, but let's talk about what's the kind of work-life balance they do. Yeah. And as we speak, I think equally good response this week too.
And a very good way to illustrate, you've talked about a week in a PSU banker's life. And as I read, there were a lot of issues that came up, whether it was the pressure to bring down the NPAs, gold loans, agri credit. So I wanted to know from you that issue-wise, what is the difference between the struggles of a public sector banker vis-a-vis a private sector banker?
First of all, banking is a very different business, where you know that they deal with money, your money, my money. It's very critical. No other business, where you need to get a license to be fit and proper. Elsewhere else, it's just the money I mean, the how much, whether you see it's a coal mines or telecom, you see the auctions are anything, every license has been auctioned, but not in the case of banking. It's the fixed money, which is 500 crore or 1,000 crore, and then you apply, and then you if you are only fit and proper, then you'll get the license. So banking is a very special business. There's a stress associated with this because you are dealing with people's money. Then do we have two sets of banks, private banks and public sector banks? Your question is, what's so special about public sector banks? Yes, there is special because going beyond banking, they need to do many other different things. Now, within banking, of course, there are issues like target pressure of meeting the targets, then off-balance sheet items, and the fee-based income, etc., which are both set of bankers, both private and public, they are subjected to. But then there are a lot of other issues, very nuanced issues. For instance, in a public sector bank, which I did not discuss in my diary, you will find that every bank now have started picking up people from the market. They are given market-related salary, the cost to company basis. They don't get exactly the house and car, etc. But whatever money is given of the equal rank of the a professional, this person gets it, and that's how it's a market. Talent is picked up from the market, but you check with them, those guys who are picked up from the market, working with the public sector, in the public sector with other colleagues. I mean, are they treated in the same way by their colleagues? Certainly not. They find themselves very different. I know of one particular bank was at a very senior level, but he has got the smallest room. He has got a pretty inefficient and the junior most secretary, and so on and so forth. And typically, they're not well looked after in terms of they're not well appreciated by their colleagues. So there's always a tension. And now, as I said, there has been pressure from different quarter to raise, to get people at a senior level, in the sense, and then as you get people, that kind of senior people from the market, those people are not exactly happy, and it creates tension. And then, of course, promotion on the same rank, there's a very intense fight for the promotions. And then, of course, the big elephant in the room is the majority shareholder of the government. I mean, there are always scope. There is always a pressure from different quarters to meet the expectations of the government. You look at PMJDY, which the current government has established, and it's a phenomenal success, basically to bring people under the banking fold. You look at the contribution, the share of public sector banks vis-a-vis private banks, then you'd know what is the kind of pressure the public sector bankers go through. And then there are other paraphernalia like that, where the private banks do not need to face, like the parliamentary committees, which I mentioned. Now, the parliamentary committees, when the parliament is not in session, they come, they visit, and it's a sort of, it could be on Hindi, Rajbhasha, it could be on agriculture loan, it could be on priority sector loans, on anything and everything. I may sound a little uncharitable, but often for at least some of the members, it's a sort of holiday and Bharat Darshan.
So there seems to be some political pressure, etc., also that comes as a part and parcel for these public sector banks. We did talk about some solutions, and you said in the last episode about the need for a change in culture in these banks. But is privatization a solution, or what do you think are the solutions to this issue?
I am not very sure whether privatization is a solution, but probably yes. Culturally, I think things will be different. At least in private sector, the culture is different, and if the government takes its shadow out from the banking system, certainly that will be good, because treat you at its business. And as Prime Minister said and Finance Minister has reiterated, the government has no business to be to be running businesses. So if it means that, I think things will change.
But I think there's a long way to go, and solutions will also evolve. Privatization may be one way to achieving some of the cultural change,
but probably there's a need for a lot of introspection for the public sector banks and the government. Thank you so much, Tamal, for highlighting these issues and sharing your thoughts.
Tamal rightly pointed out the unique challenges of public sector banks that perform functions beyond banking and are answerable to the government and parliamentary committees. And all of this adds to the pressure on public sector bankers. We also wanted to know your views on this subject, but we will come to that later. First, the results of last week's poll. We had asked you, will you park your money in green deposit? Nearly 54% said yes, they will, while the remaining 46% said no. Coming back to our discussion on public sector bankers, our question for this week's poll is, are public sector bankers overworked? Our poll is open from Thursday, which is today itself, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back with more news and with more analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.